Starting today's analysis on the 1 minute chart. I want to walk through all zoomed in because if I zoom out, it's just total chaos, absolute mess of lines. We had a dip this morning and then a bounce, and then the price turned down. And I entered into a put right here. I said that's pretty high volume for a big dip down. I don't think we're going to see this bounce hold. And then the price did come down lower, and then it bounced right here at the 1713 level, came back up and came down again below that trend line, and you can see this uptrending, this trend line here, and continued higher. And it was right about here. I was like, uh-oh, that looks like a double bottom. And then this descending overhead resistance, this downtrend, did initially hold. And then I said, hey, as soon as this thing gets up here, that like if the price can get above this downtrend, that's really bullish. That's going to be a reversal. And sure enough, the price did break up and out. And as it came down and tested this downtrend, I said, hey, time to buy a call. I exited my put that I bought in the morning up here. Then I bought a call right here. And I'm actually really proud of this play because what it was an acknowledgement of a failure to continue downward as I was expecting, and the acceptance of a loss on some puts and flipping to calls. This was a good play. I did have to actualize a loss on the contract I was holding from last week, which was painful. My daily trading chart is looking pretty bad, I'm not gonna lie. But I'm gonna give myself a couple more days, the rest of the week, to try to stage a recovery before I share it again. This is how it goes when you're trading AMC. It's difficult because implied volatility is dropping. I don't have a whole lot of cash, so my options are limited, right? I can't short. Going long is hard. We only have a couple $100. You can only get a handful of shares. So yeah, I'm having a hard time, which I expected and acknowledge. This is going to be a long grind. Something else too that I've been waiting for is an extension of the V bottom, or the V top. And I believe that's what we're starting to see now. Here's Bulkowski's webpage on extended V-tops. You can see the example right here. The price does rise before continuing its downtrend. This happens when the downtrend is stopped by a strong level of support and resistance. And here that happens to be around $17. And there's a lot of good trading tips here. I think I might start following these trading tips more. Bulkowski knows what he's doing. I obviously don't know as much. I thought this example was interesting because this run with this consolidation midpoint and this big fat green bar before topping out resembled the run we saw in AMC pretty well. And now we're in this kind of shelf. I do expect to see this lead to further downside. I know, big green day today, right? But there's a few things that I need to go over to show that it really wasn't all that bullish. Not quite. I did trade a call today, and that was good. I played this reversal perfectly, right? Cut my losses, flipped to calls, took some profits, and walked away. And then I didn't look at the charts the rest of the day. And you can see that these levels that I've had established from earlier this week were pretty important all day long. Right around the $18 level, we had a lot of sideways action, and I'm glad I wasn't trading through here because these sideways motions just kill me. And then I took a peek here and said, hey, I'm gonna dump this put. That was a $10 put. It was only cost me $10 and $5. Like, okay, whatever. I thought that was probably going to be a good top here at 1834, and then boom, the price moved up higher and higher, and then kind of formed these twin peaks right at 1870. And this is a very important level. That's why I've got it bolded here in, I think it's line weight 3, 4, because this is a big level. And the price today closing 2 cents below it. Yikes! You can see that there does seem to be a bottom in here. This is very possibly a great spot to establish another run. Looking at these peaks, I see that the RSI did come up into the overbought level at a relatively equal height in the RSI, and the peaks are about the same too. So not much hope for bearish divergence there. On the flip side, at the very end of the day, we had a higher high, higher high. So not bullish divergence. This looks pretty neutral. It looks like the price came up and found it a nice heavy level of resistance and is spinning, going up and down, up and down. Bukowski calls that spinning. Now, what really got my attention was earlier this morning when we were seeing this explosive run that the implied volatility did not follow suit. Yesterday, I got really excited when I saw the implied volatility rising on a red candle, red daily candle. And here I'm getting excited because the volume is going down as the price is going up. What does that mean? It means that the next rally hasn't started yet, or the next big trend hasn't started yet. It means that implied volatility is dropping, signaling consolidation. That sounds perfectly on par for the V-top extension, which I have been worried about and have been talking about, and here we are. We're in the extension of the V-top. It's not quite bullish, not yet. So now I'm going to back out a little bit, and we're going to do some more analysis. Let's just get me onto a fresh chart, and I'm going to zoom out a little bit. So yesterday I was saying this didn't form a double bottom or a inverted head and shoulders. And that's true, it didn't. But this morning when the price dumped and then touched that 1713 level, just like it did back here in this double bottom, that's when I knew that this was going to reverse and I wasn't going to get the downside that I was looking for. So that was fortuitous. And you can see that this bottoming pattern is happening below a trend line support. And the price did move higher. So this is a measured move up. That's not something I say a lot of because AMC is in a big downtrend, right? But there's your first movement, your corrective phase, right? And then a push higher. I'm going to break that down a little more detailed and actually find what these trend lines are. So you go to the bottom. This is how Bukowski instructs to draw trend lines. You go to the bottom and then you want to draw a trend line that doesn't pass through the price between the next peak, so, and that low, which would actually be way out here, right? If you look at it strictly, not cutting through this price action would lead to a very shallow trend line. I'm going to make it internal and just say, hey, that's a better fit. These could be bottoming, this is like a V bottom almost, really small, but it's okay. I'm going to accept that. So this would be the uptrend, and then the price had a very gradual downtrend, and I think ideally it would start there and perfect right there. This would be the downtrend. You can see these pipe tops cutting through the top of that. That's okay. They're topping pattern. And then this level of support and resistance, this uptrend, did push the price higher when it was encountered, and we had another uptrend start. And that high would be here, and so we want to bring that down. This would be the final uptrend for the day. You can see that the price did break down below it, come up and test that breakout price, which is where the price exited or crossed below that trend, and then didn't set a new low. So end of the day trendless, actually. I haven't looked at the after hours action yet. I'm just going to turn it on, kind of sloughing off a little bit. Whatever. After hours isn't all that consequential. I like to leave it off. I don't get carried away with after hours, especially since most of the time, like we had today, it's just like a tiny little gap, like 10 cents. It doesn't even matter, it just fills right away. So we did see a measured move up today after the completion of an inverted head and shoulders this morning. And this wasn't an inverted head and shoulders until this morning, but it did complete, and that's where we're at there. So let's take another look at where we stand in this extension of the V-top. Let me turn that drawing on. Just one moment here. So this is the first V-top I saw, and big price spike up, and then boom, the price just got shot right back down. And now we see ourselves moving sideways more or less, right? Sideways. The high of the previous week wasn't surpassed. That was 1901. Today we saw a high of 1892. So significant level of support and resistance at $19 was not overcome. And that's important because basically what that means is that this could just be a flag. Flags have parallel trend lines. I thought we were going to be in a half-staff tilted flag, but now it's shaping out really clearly just to be a plain old bear flag. And we have all the touches we need for that. 1, 2, 3, 4. We have 5 clean touches now. It wouldn't surprise me in the slightest to see this thing top out in a very mirrored way like this, and just move to the downside, moving on later this week. That's very possible. Something like that. You see how these two candles are pretty strong, and this is a pipe top actually. If you look at that, those are pipes. So it wouldn't surprise me to see another drop down to 17.99, and then if 18 is lost, probably going in for a test at that 16.90 level. Should the price reverse. If the price does make an upward breakout, I'm gonna look at that 1987 level with a lot of scrutiny, seeing if the price can break out above that. If it does, I mean, this is technically a double bottom. We do have 2 touches of a horizontal level of support and resistance, breaking a downtrend. The difficulty is knowing where this pattern starts. It'd be really funny to look at as a double bottom. So I'm gonna go ahead and try and connect these 2 peaks. And I do this because there's a buy signal in double bottoms, an aggressive buy signal. Now, the pattern doesn't confirm until the price can close above the intermediate high between the bottoms. And we did have that today. So in that sense, it is confirmed. But the aggressive buy signal actually occurs by connecting the top of the pattern, the downtrend that begins the pattern, and the intermediate peak. So there's going to be this diagonal line there, and when you pass that, that's the aggressive buy signal. And we saw that happen this morning, and this is essentially what I traded. Once we hit that buy signal, I sold the puts and flipped the calls. And so I'm going to try to use this trend line to help me identify where this double top or double bottom starts. And it's looking like it might start right around here, and that makes sense. You can see that there's a lot of congestion through here. And by that, I mean the price isn't really moving up or down a whole lot right there. Okay, you can see this, this was the inverted head and shoulders that broke to the downside, not really a bottoming pattern. But that was our last potential place for reversal. So that would probably be a good spot to take it. So from a high of 23.96 to a low of 16.94, that's gonna have a pretty good price target. I'm gonna calculate this, and it's going to give me a pretty good idea of what the height might be of the extension of the V top. I'm just going to do that really quick. I haven't done any analysis today, so I'm just doing this on the fly. 23.96, and we're going to subtract the low, 16.94. I can't remember what it was exactly. I hope that's right. That gives me $7, and this would be, I kind of want to say, that's not really an atom bottom, is it? They kind of look like even eve bottoms. Let's find what our percentage meaning price target is here from Bulkowski. Chart patterns, index. Take me to E. Find Eve and Eve double bottoms. Woot woot, here we go. Percentage meaning price target is 65%. So that means I'm going to be taking the height of the pattern and multiplying it by 65 by 0.65. Which is $4.56. I'm going to be adding that to that intermediate peak to calculate the price target. And that high here was $18.69. So $23.25. That would be the price target if this is a double bottom. And it'd be a weird double bottom. I'm not super comfortable calling it a double bottom. Let's have a look here. 23.25. Because really this looks like a rectangle to me. It looks more like a rectangle than it does double bottom. And I say that because the incoming trend, I mean, it's down, but it's gradual. And typically with an even eve, you don't get such a shallow sloping trend coming in. Now, you can see that when you do have a shelf like here in this example, this would be a good shelf for double bottom. So if this were to come up to 23 and then come back down, that would make a nice first half of a double bottom, but that's so far ahead of us. That's not technical analysis, that's guessing. At any rate, you know, typically these are pretty good downtrends that lead to a double bottom, and that's just not what we have. Not certain about it. Let's go ahead and take a look at that level though, 23.25, and see what we see. Back out a little bit. Pull it over. 23 is right there-ish. And then 25. So that is a significant level. I'm gonna look at that on the 4-hour chart actually. 23.25. Oh, I know where I can see a 23.25 level. It's gonna be on one of my big charts, I think. Like I said, I didn't do any analysis beforehand, so I'm just looking at it now. 21.26. That was a symmetrical triangle target. That was pretty good. That's still too low. I think it's going to be on my big chart. 23.45. There it is. 23.45. That double bottom target is actually coming from, yeah, this is the big chart. This is the chart with the $7 price target on it. This double bottom in purple here, this one. Boom, boom. Big flag. Boof. Not flag, but it's a handle of the this double bottom. And it broke out to the upside. And the hypothetical price for target for that double bottom was 23.45. So that's only 20 cents away from the double bottom that we had down here. Look at this double bottom too, a little bottom in there. But that bottom reached its price target like right away, and we're already coming off of it. So yeah, this is what the bulls were looking for. That push up, and then boom, a test of 23.45, and then a push up. But the bulls did not get that. Nope, the price just kept going down, and now we find ourselves in a handle. And this handle could go up to 23.45, way up here, and then come back down. And that's actually, that would make a lot of sense. On that VTOP extension webpage, Bulkowski does mention that the price can retrace quite a bit now, quite a bit, and still be respected as a VTOP. It's gonna have to retrace more than 38.2%. Ooh, 38.2% on that level perfectly. Okay, this is good analysis. This is really good analysis. Extended VTOP. That's where we're at. And the clue here is that IV is not rising on this run. That's the biggest tell. I'm going to open up another chart. I haven't opened my default drawings in forever. So what am I looking at? I'm looking at the daily chart now, and that's going to give me an idea of what we're doing with the implied volatility. You can see on the red candle from yesterday, we had it tick up, and now today it ticked down on a green candle. All right, that's great. Let's see here. It looks like, you know, these were much shallower ticks down. This is a pronounced tick, pretty push high. So yeah, not super bullish yet. Not yet. I mean, all things considered, yeah, like this wrecks day traders to have this sideways action go with downward implied volatility. Look at the volume too. I mean, that's not the start of a rally. Not yet. Show me a spike above that 30 period average and we'll talk. Here, this was a big Q here, you know, boop. There was some resistance and then bam, huge volume breakout. Not quite what we're seeing here yet. So I'm still bearish. The patterns still hold, and I'm still in the game. I gotta make some profit this week. It's gonna be tough. It's gonna be real tough, but I'm just gonna keep going until I run out of money because, well, with AMC, that's what's likely. The stock moves in a way that's just terrible for day traders. It really is. So that's what I have for today's video. Happy trading.